So contrary to popular belief perhaps, financial markets do not just exist to have speculators make money. They serve a very important function and role, and in this lesson we'll discover what some of those functions are. So I've listed 4 functions here. There are obviously more, but these are considered to be the most important. And for this course, we need to look at these ones because they will help you as a trader as well. First of all, price determination. Yeah, so one of the functions is for everybody to find a price for what they are buying or selling. This seems pretty obvious, but you can imagine that it's very difficult to be able to sell something or to buy something at a good value or a good price if there is no general price determination, no price agreement on what something should cost. And you can think about oil, for example. Oil has a price which is globally monitored. Gold has a price, stocks have prices, and currency also are valued. Currencies are valued against each other. So the function here of a financial market is for everybody to see what things cost. Price determination, very important. So second up, mobilization of funds. It's a place where money comes together, those with a desire to sell and those with a desire to buy. Their funds meet in one place, in the financial markets. Again, if financial markets weren't there, on a global scale, for example, with many participants, it would be a lot more difficult for this money to find its way between those looking for it and those who want to offer it. Mobilization of funds, another very important point. Number 3, liquidity, super important one. You will notice this even as a small trader, you will start to notice what the benefits and the downsides of either having liquidity or a lack of liquidity. But think of it like this. Think of it like the oil in an engine. If there is no oil in an engine, the engine doesn't run smoothly. And liquidity makes sure that operations within a financial market, so the buying and the selling of assets, happens smoothly. It's really as simple as that, but it's very important to have liquidity. So say that you are stuck with 1,000 barrels of oil. Well, it would be really nice if you have a lot of participants in the market that you can sell this product to. And this isn't always the case. And when this isn't the case, we talk of illiquid markets. So if you have a very scarce product, let's say you found pink gold or whatever, something like that, and there are no buyers, then it becomes very difficult to sell this and you're going to be stuck with it, probably for a long time. So liquidity in markets is essential for markets to run smoothly and for you as a buyer or a seller to be able to sell or buy your products swiftly, quickly, and efficiently. Having a financial market in place makes sure that there is information available. It will reduce costs to all participants involved. Think back to the local market where everything happens in one place. Everything runs a lot more efficiently. And especially nowadays when everything is online, we have big online marketplaces and big information providers, and it's usually all in one place. Well, the internet, for example, is a good example, of course. And this just makes financial markets run a lot smoother, and it makes the whole experience for participants a lot more pleasant. So there we have it, 4 functions of financial markets. There are more, as mentioned, but these are really important also as a trader. And I hope that this helped you make sense of the functions of financial markets and that you're starting to get a big picture, a broader picture on what is happening in financial markets. Next up, though, we're going to talk about the types of financial markets. So we're going to talk about stock markets, bond markets, derivative markets, and a couple of more. Not all of them, but we'll discover the most important ones, and I hope to see you there.